Hey everyone, welcome back to the channel. Big news this week, Nvidia has just reported earnings for Q1 of fiscal year 2026, and it's making waves in the markets. This wasn't just another solid quarter. This earnings report gives us a look inside the world's most important AI company, including record revenue, next-gen chips, and a serious blow from US-China tensions. In this video, we'll go over what Nvidia actually reported, what it means for the future, the China situation, and I'll share my own thoughts on where the stock might be headed next. Now, before we jump into the numbers, let's quickly talk about what Nvidia is really doing these days, because it's not just about gaming GPUs anymore. Nvidia is the backbone of the AI revolution. Their chips power everything from ChatGPT to autonomous driving, data centers, cloud infrastructure, and even robotics. They dominate the high-performance computing market, and their products are critical to training and deploying AI models. In short, if AI is the gold rush, Nvidia is the company selling the shovels. Alright, so let's break down the numbers. Nvidia reported revenue of $44.05 billion, beating analyst expectations of $43.29 billion. Earnings per share came in at 96 cents, also above the 89 cents forecast. However, there was one area of concern: gross margins came in at 61%, significantly below the expected 71%. This was largely due to a $4.5 billion charge related to unsold chips in China, which we'll talk about more in a moment. If we exclude that charge, Nvidia's adjusted gross margin would have been 71.3%. Actually, above their previous guidance, so operationally, things are still very strong. One of the biggest challenges Nvidia is now facing, and something that overshadowed this otherwise strong quarter, is the situation in China. In recent years, Nvidia developed a chip called the H20, specifically designed to comply with earlier US export restrictions. It was a modified version of their high-performance Hopper chip, created to serve China's fast-growing data center and AI market without breaking US trade rules. In Q1, Nvidia recognized $4.6 billion in H20 revenue, but shortly after, the US government tightened export controls again, and this time without warning or a grace period. The ban, which came into effect on April 9th, immediately blocked any further shipments of H20 to China. As a result, Nvidia was unable to deliver an additional $2.5 billion in orders, and was forced to write down $4.5 billion in inventory and contractual obligations to chips they had already produced or committed to. And the outlook gets even tougher. For Q2, Nvidia had an $8 billion pipeline of H20 orders ready to go, all of which are now off the table. The company also acknowledged that going forward, they have no alternative product currently approved for sale in China. That means a complete loss of access to what they estimate is a $50 billion total addressable market in AI computing across China. This is more than a short-term revenue hit. China represents one of the largest and fastest-growing AI markets in the world. With more than half of global AI researchers based there, any platform that wins China is also positioning itself to lead globally. Now that Nvidia is essentially locked out, there's a real risk that Chinese companies accelerate development of domestic alternatives, chips, platforms, and full AI stacks, which could reduce Nvidia's global dominance over time. It's not just about chips anymore, it's about who controls the infrastructure behind the future of AI, cloud, 6G, quantum computing, and more. So while Nvidia is still crushing it in the US, Europe, and other global markets, being shut out of China creates long-term strategic risk. And it's a clear reminder that the future of tech won't be shaped by innovation alone, but by politics and international policy as well. Now, despite all the drama around China, Nvidia's core business is still firing on all cylinders, and the key driver behind that strength is their new Blackwell architecture. This was the fastest product ramp in Nvidia's history. In fact, during Q1, Blackwell already accounted for nearly 70% of all data center compute revenue, which is remarkable considering it just launched. The transition from the older Hopper architecture is already almost complete, and that says a lot about how much demand there is for this new platform. So, why is Blackwell such a big deal? Compared to Hopper, Grace Blackwell delivers up to 40 times the speed and throughput. That means AI companies can train models faster, run more complex workloads, reduce power usage, and improve overall cost efficiency. For cloud providers, startups, and Fortune 5s trying to keep up in the AI arms race, this is exactly what they need. What this also means is that every company currently running Hopper infrastructure will eventually need to upgrade. It's not optional, it's a competitive necessity. Whether it's generative AI, autonomous vehicles, healthcare AI, or robotics, Blackwell is now the gold standard. And Nvidia is already positioned to be the default supplier across that entire ecosystem. Looking ahead, Nvidia is guiding for $45 billion in Q2 revenue, plus or minus 2%, and expects gross margins to improve slightly to 72% non-GAAP. That's despite the total loss of China H20 revenue, which tells you just how strong demand is in the rest of the world. What's more, Nvidia is targeting mid-70s gross margins by the end of the year, thanks in part to Blackwell's improved efficiency and cost profile. So, while geopolitical risks remain, technologically, Nvidia is far ahead of the pack, and Blackwell is solidifying their leadership in the AI era. This isn't just an upgrade, it's a full-on reset of the performance baseline across the industry, and Nvidia is the company setting that baseline. Here's my take. Yes, the China export ban is a big deal, and it's going to cost Nvidia real money. But in the grand scheme of things, it doesn't kill the long-term story. Demand for AI compute globally is only accelerating. Nvidia still owns the performance crown, and with Blackwell rolling out and likely leading into enterprise, cloud, robotics, and even edge computing, I think we're still in the early innings of this megatrend. If the US government doesn't let up, Nvidia may need to innovate around compliance or watch China build their own stack. That's a risk. But from a technology and business standpoint, they're still executing incredibly well. So, to wrap it up, Nvidia beat expectations on revenue and earnings, took a hit on margins due to export bans, and gave strong guidance despite losing access to a $50 billion market. They're leading the AI hardware race with Blackwell, and demand doesn't look like it's slowing down anytime soon. What do you think? Are you still bullish on Nvidia, or are the China risks too big to ignore? Drop your thoughts in the comments, and if you found this breakdown helpful, give it a thumbs up, subscribe to the channel, and I'll see you in the next video.